Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the miners. We'll start it off with the dollar and then gold. So the dollar is consolidating after the big bull move up. This is the most bullish bounce attempt that we have seen on the dollar in a very significant amount of time since we started pulling back. Really, I would say since April, about a 5-month time frame since we've seen this kind of bounce. So we have a clear higher low, higher high pattern at this point, and the consolidation that is currently ongoing is healthy and looking to maintain, form another higher low, and then try and see continuation of this bounce. The weekly time frame does have a bit of an upper wick because that consolidation occurred at the end of the week, but we're on the verge of the bullish MACD cross. The RSI is clearly coming up from oversold levels, and the next resistance level is going to be 94.15. Now, we're not going to expect just a V-shaped recovery here. If the bulls want to shift momentum on the weekly chart, where we have seen the bears in control now since pretty much the start of the year, it's going to take a higher low and a higher high. You can see that that has not happened this entire time, where we've seen lower highs and lower lows every single month. And now we're looking for a bounce attempt, a higher low, and a higher high to shift the trend and the momentum for the first time in 2017. So the dollar during all this is pulling back with the inverse correlation. We see the inverse correlation in periods like this where we see geopolitical events and Korea tensions causing a spike in gold, but that correlation does pick back up, the inverse correlation with the dollar. So it's only temporary that we see a break in that correlation. So we're looking at the bears still in control here. We hit a lower low on Friday, 1275.88. I'm looking down at 1274.45. We've got a support level there. And then one more down here. That's at 1267.21. So we'll see if the bulls are able to maintain those levels. If not, the next one's all the way down at 1251. So the bulls really want to hold that level. Again, it all depends on how significant that weekly bounce is for the dollar, in my opinion. If we do see the dollar pull back, we will see a bounce here on the daily time frame, but it will likely result in just another lower high. Anything under 1314 is a lower high here on the daily time frame to be keeping an eye on. So looking at the miners, we've got the senior miners here, GDX. We can see we've seen lower highs and lower lows. This exponential resistance has been driving the price down. We did close over at one day, and that was that North Korea-driven political event that we had bullish gold reaction to. But other than that, the bears are staying in control. I'm looking at support down here at 22.42 and 22.02. And here we are down at 22.95, trying to hold some moving average supports, but approaching those two support levels as we continue to see the lower high and lower low weakness. So the weekly time frame, we pulled back 3 weeks at this point. We can see from the bull break, that's still not an entirely significant amount, but the bulls really want to hold that low $22 area to not give back too much of the breakout that we have seen. And we did close at the low of the week, so the bears do have momentum in their favor, but we do know that we're likely to see a short-term bounce in gold when the dollar does pull back on this weekly time frame. So again, anticipating the dollar on the weekly, we'll see some consolidation, anticipating some short-term upside for the miners. But where we stand right now, the bull miners need to be quicker to lock in their gains because these moves are not lasting long. We're not seeing swing trade positions play out. So more of a day trading environment for bull miners and a swing trading environment for bear miners where we currently stand. GDXJ is doing the same thing. Support is down at 33.45. Then I'm looking down at 33.17 and 32.46. So a clear lower high, lower low pattern. Bounces are short-lived. Only time we've seen 2 green days in a row on this consolidation. Again, North Korea geopolitical event. We pulled back here. Anything above 31.80 will be a higher low. We can see a higher low. And if we pull back, wanting to hold that level, this 100-week moving average support has held 1, 2, 3, 4, 5, 6 times. And we're coming up to that level, 33.02. So we can start to be looking to initiate a bullish position around that moving average just because of how historically it has come into play. And then it would be a fairly tight level where we would know to exit as bulls if that level were lost clearly on the weekly. There have been a couple weeks we closed right on it, but then quickly recovered. So that's where we are heading into next week. Healthy consolidation for the dollar on the daily. We'll see if that continues. And gold is not even really seeing much of a bounce. You see Friday a big red day for gold, and the dollar on Friday was also red. So that correlation is even favoring the bears a bit. I appreciate you watching. We'll continue to check back in throughout the week. I hope you have a good rest of your Sunday.